students, welcome to Prudential Businesses. So students, in this class we'll be discussing another topic, that is insurance services. Okay, so this topic is from class 11 CBSE Business Studies. Okay, so regarding this topic we have also uploaded some of the previous topic in this Prudential Business YouTube channel. If you have not gone through, please do go through that topics. Okay, so this is as per chapter number 4 CBSE class 11 Business Studies. So this is insurance services, is actually the second part of the business services part. Okay, chapter 4 was business services. Of that, the number 1 was banking services. Banking services already we have done. Now this is the second part, that is the insurance services. Okay, to proceed for the insurance services, you need to go have the knowledge of the meaning of insurance. We have learned a number of times relating to the regarding the auxiliaries of trade. We have learned insurance, we have learned banking, we have learned transportation, we have learned warehousing. All those things as we had learned, right? Now this is just a recap of what we have already learned in that chapter 1. Okay, regarding insurance. See here, this is just a recap. This one we have already done in chapter number 1. Here you see, insurance is a contract represented by a policy. Policy, that is an agreement. Agreement, usually there will be two parties. Those parties we will be learning there in the next slides. Two parties which will be insurer and the insured. Okay, so in that case, this is an agreement between the two parties which an individual or an entity receives financial protection or reimbursement against the losses from an insurance company. Usually the insurance company, we will be learning it in details, that is called an insurer, and the person or the individual or the entities that will be taking an or buying an insurance policy, that will be called as an insured. Okay, so insurance refers to a contract by which an agreement will be signed between an individual or an entity which will be called as an insured with the insurer. For what reason will they be signing? They will be signing so as to receive protection or reimbursement against any types of losses or risks that may arise in our own life or in the life of a particular business. Okay, so that is about the meaning of insurance. Now let's proceed. So now here we will be learning some of the terminologies. This is as per your syllabus. You need to learn that, because if you learn these terminologies, you will be the things will be easier for you in the while we learn about the principles of insurance. Okay, so first thing about the insurer, we have already learned that the insurance company which will be providing you the insurance, that will be called as an insurer. Next will be your insured. Insured, that means who will be buying the insured policy. If I purchase the insurance policy from Reliance, then I will be an insured, and the Reliance company will be insurer. And next, this is happening of an event. This is very important. Please mark this, happening of an event. See, this happening of an event will refer to the incident. Many cases we will be getting related to this happening of an event. In the cases with the principles of insurance, there is a principle which is called principle of causa proxima. In that case, this terminology, that is happening of an event, will be used repeatedly. That means it refers to the actual incident, whether the incident that had happened in reality matches with the insurance policy or not. That has to be tested for claiming compensation or for claiming insurance. This happening of an event refers to that kind of activity, that is the incident or the accident with which only we can claim compensation. Okay, next we are proceeding. Here you see, regarding happening of an event, certain examples have been given, like the case in cases of fire in insurance, the loss can be compensated only not by any other cases, but only by happening of the incident that is caused by fire. This is just an example. I repeat the example. In case of fire insurance, if a person has purchased a fire insurance, in that case, a person can claim compensation for the loss, and that loss should be done by no other cases other than the fire. Okay. And next terminology is the premium. So what is the premium? It is actually the amount of money which we pay regularly, either in a monthly basis, or in a quarterly basis, or in a half-yearly basis, or either in an annual basis, up to the desired amount of money which we need to pay. Okay. And next will be another terminology, that is assurance. Now you see, what is the meaning of insurance and what is the meaning of assurance? There has to be a difference between them. If you purchase a life insurance company from an LICI for your own life, is that an insurance or is it an assurance? We need to be clear cut with that. But if at the same time, if I purchase a fire insurance, if I purchase a shop insurance, in that case, that will be called as an insurance or an assurance. We need to clear cut with that. See here, what is written here? In the cases with an assurance, in this context, the sum is bound to be repaid, the insurer to the insured, whether the insurer suffers a loss or not. Take for example, in the cases with your life insurance, LIC. If you have purchased an insurance policy, then at the end of the maturity period, the LIC has to repay you back the amount of money. Whether you have suffered any incident or whether any type of happening of an event has been occurred or not, the LIC company has to repay back the amount of money at the end of the period. That is called assurance. Okay. Next you see insurance. Here the insured must suffer a loss or damage to claim compensation. The concept of pure risk will be applied here. Fire insurance and marine insurance, etc. Here you see, remember that meaning of pure risk. Okay, pure risk here, loss or no loss. This will be applied to insurance. Here the insured must suffer a loss. Other than assurance, if you buy an LIC, it is not that you have to suffer, you have to have an accident. Okay, the LIC will be paying you the money whether you have suffered an accident or not. But in the cases with an insurance, you have to suffer a loss. Okay, if you have to suffer a loss, then only you will be getting the insurance for, then you will be eligible to claim insurance. If you have suffered no loss, then you will not be getting any insurance. Okay. Next you see insurance policy. See, we have, these are just terminologies that we need to learn. In the cases with insurance policy, this is nothing but it is a written agreement between two parties. Which are the two parties? Number one will be your insurer and the insured. This is an insurance policy, just an agreement, and in that agreement all the types of activities will be written there. Okay. So now let's move on further. Now here we will be dealing with the principles of insurance. See, principles of insurance means what? These are the methods or way which are followed universally with certain aspects. Now what are those aspects? Here are 7 principles of insurance. We'll be discussing one by one. Okay. Now you see the first principle is that we'll be discussing here in details each and every single principles. Principle of utmost good faith means what? Here in this case, both the insurer and the insured must have sufficient faith in each other. Okay. They should not try to deceive each other. Okay. Here you see, as per this principle, both the parties must not hide any fact, either it is material or immaterial from each other. One example here you see, a person suffering from malicious disease must report to the insurer before taking a life insurance policy, because there are certain life insurance policies for heart diseases, for cancers, or even for coronavirus. There are certain insurance policies that have been bought out to the market. So in that case, if a person has been suffering from that previously, that fact should be revealed to the insurer or the insured company, whether then the insurance company will be deciding whether to provide this set of insurance cover to that person or not. In that case, each and every single person, even immaterial facts, even for your shop, even for your house also, if you have got any immaterial or material activities, you or risks, material or immaterial risks or dangers, you should reveal that to the insurance company. Failure, see here, one sentence is given, failure to disclose would lead to refusal of payment of compensation by the insurer. That means if you do not disclose the required amount of danger or risk that you already have, then at that time, if the insurance company discovers that you are in an attempt to deceive the insurance company, then the insurance company may refuse to pay your compensation. Okay. And next here you see the second principle, that is the principle of insurable interest. Here you see in the cases with the principle of insurable interest, both the parties must have sufficient interest in signing the insurance policy. That means what? If I have taken an insurance policy on a particular object, then the owner of that object must also have that insurance, certain insurance interest for that particular object. Now take for example, if I want to have a loan, take a loan from a particular bank, in that case, I need to provide for certain collateral damage, that is called security, or we call it as mortgage. In that case, the banker has got the right to ask for insurance on that property or that mortgaged amount of value. Okay, so that is called the principle of insurable interest. Both the parties, insurer and the insured, must have sufficient interest on the particular object or particular character upon which we are going to purchase an insurance policy. Here example here is given. Here you see, if a person, which this is the example which I have already told you, that a banker, take for example, I want to take a loan from the bank, and for that purpose I have taken my factory as a mortgage value or as a security value. Okay, so in that case the banker has got the sufficient interest or sufficient right to ask for security for my factory, so that if my factory gets damaged from any fire or any other losses, then the banker can claim compensation from the insurance company. Clear? So that is about the meaning of the principle of insurable interest.